everyone, Tim Manfro, aka Mortgage Manfro, and this is Mortgage Dictionary. Today we're going to talk about a term you may have heard thrown out there, DSCR Loans. Okay? What that stands for is Debt Service Coverage Ratio Mortgage. This type of mortgage is only for an investment property, and it's going to focus strictly on qualifying based on the rental income that's generated from the property, and if it's not rented, the market rent, so what it could rent for, versus the monthly mortgage payment, which is going to include principal, interest, taxes, insurance, and HOA if there is one. So the goal is basically to make those equal to each other. Okay, so you're going to want to have the market rents be the same or higher than what the monthly payment is. Now that's not always the case. You don't always need them to be the same or the market rents to be higher to qualify. There's something called no ratio DSCR loans, which means that they're not going to care what the rent is versus the mortgage payment. Those types of mortgages require a 30% down payment. Okay, this is investment property, remember? And also, if you're going to go with just a regular qualifying DSCR loan, in the best possible scenario, you can get away with putting as little as 10% down. Now, this is a mortgage that doesn't focus on any other qualifications for you on income. The minimum credit score for these mortgages can be as low as 620, depending on the situation. And this could be done on multiple unit properties or single family homes or condos. So that's a DSCR loan. This is Mortgage Manfro. Thanks for checking it out.